What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we continue to test critical support at SPY 390 and this will continue to be a battle until we either get a strong bounce or the bears break right through this level and go down to fill the gap. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, just a quick reminder that you can now use coupon code Labor Day, all one word, to get 50% off your first month of bank trade alerts. And that does include all of the buy and sell alerts for the TQQQ and the SQQQ, as long as you're signing up for Bank S+. Alright, so today in SPY we were down 0.38% and SPY continues to test this very critical support trend line right around 390. And this is going to be the level that the bulls need to defend. Otherwise, we could see a very volatile sell-off to fill the gap below right around 378. Now, keep in mind, below this level at SPY 390, there is very little support. So the selling could really start to pick up. And that's why I call it the waterfall wave of selling that you're going to see in these capitulation type events. Now, I'm not telling you that we need to capitulate because this is still a very strong support level, which you can clearly see is holding up. But if the bears continue to push and the bulls refuse to buy at these levels, it is going to be much lower prices that the bulls are going to retreat to, which could take SPY to at least retest the previous lows. Now, don't look too far ahead. That will require us breaking through this support. So you can never just assume that we are going to break through support. You need the price action to prove it. And right now, price action is not proving it can break through that level. It is proving that it can hold that level, and a confirmation will be a bounce from this level back over 393 and then attempting to break back over the 50 daily moving average, which is at 401. So if you want to view this as a trading range, it is between 390 and 401. The bulls will be trying to break back over 401 and the bears will be trying to break down below 390. And of course, the market will be a lot more bearish while SPY is below 390. And the market will be a lot more bullish if SPY can get over 401. Also, if you've been tracking the backtest that says the bottom is likely in for the year, the max drawdown we had from that backtest was actually in 2009, and theoretically that would take SPY down to about 383.5, which is very close to fully filling the gap. So if we do break support at 390, it is very likely that we will fill that gap, which is right around 378. So just keep all of that in mind, and that is why I continue to tell you this is an extremely critical support, and the bulls need to defend this level to prevent SPY from going much lower. On the Nasdaq 100 triple Qs, we were down 0.72%, and the triple Qs continue to close below 296, which is significantly increasing the probability we're going down to fill that gap and test support at 287. Below 287, the floor likely starts to fall out as the bears take over control, which significantly increases the probability of retesting the lows in the high 260s and possibly even putting a brand new low for the year. Now keep in mind, in the short term, we are still making lower highs and lower lows, so even if we start to bounce and get back over 296, you still need to respect the resistance above, which is going to be right around 303 to 306, and the bulls will need to clear 306 to start breaking out of the short-term downtrend. So by far in the short term, the bears have full control while we have the lower highs and lower lows and while the triple Qs are below 296. So wait to get more bullish until we either test support at 287 or break back over 296. On the Dow Jones, we were down 0.5% and the Dow Jones is barely closing below that support trend line, which is right around 312.5, and we did close about 30 cents lower. You can clearly see there is a huge gap to fill at 306.8, so it is very likely while the Dow Jones is losing the support trend line that it is trying to go down there to fill that gap. Below that gap fill, if we don't find buyers and we don't find support, you're looking for a retest of the previous closing low right around 298. And if we break below 298, we could go down there to fill that gap at 285. The Dow Jones bulls need to get back over 315 in a hurry and then get back over the 50 daily moving average at 322. On the Russell 2000 IWM ETF, we were down 0.99% and the small caps came all the way back down to that critical support at 178. And so far that level is holding up as support, but we have no confirmation of a bounce from this level. Below 178, we have the support trend line at 176. And then below 176, we could very easily retest the previous closing low at 164. So this is extremely critical support. As you can tell across the indices, these are very sensitive areas that if the bulls cannot defend, the bears are very likely going to push for either a retest of the old lows or a brand new lower low. IWM needs to get back over 183 to about 184, and then we'll have the resistance trend line around 188. On the ARKK ETF, we were down 1.23%, and the ARKK ETF continues to test that support at $40 while it is failing to break above the resistance trendline, which means a break of 40 could send us back down to 36.5, and then below that we could see a brand new low right around 33.7. ARKK needs to get back over 43, and then it could start to push to close the gap at 47, but this is a risk-off ETF until it can get back over 47, so do not expect anything other than lower highs and lower lows until the price action can prove a bullish breakout. On the VIX, we were up 3.54% as the VIX continues to close above 24, which means you need to continue to expect this to remain a volatile market. The bulls need to crush the VIX back down below 24, and then they can try to close the gap down there at 21. So the market will start to seem more bullish if the VIX can crush down below 24, but it's going to remain volatile and likely in the short-term downtrend while the VIX is above 24. On Bitcoin, we're currently down 4.3% as Bitcoin has finally got down to the critical support, which is right here, right around 19,000. And if this level fails, it is very likely that Bitcoin is going to 17,200 next. Below 17,000, the floodgates of selling open up as we are likely going to flush down to 12,000. But I do believe this day, specifically as far as Bitcoin cycles go, could be marking the end of crypto winter. So don't be surprised if this support holds and in the rear view mirror we look back and see this was a double bottom. So for that reason, if you're a long-term bull on Bitcoin, you can start to accumulate at these levels. But just keep in mind that typically as a Bitcoin holder, you will want to be prepared to hold for at least 2 to 3 years. As a trader, you're waiting until a breakout above 21,600 to start getting more bullish, and then we'll be looking for a retest of that resistance at 25,000. On Amazon stock, we were down 1.1% as Amazon continues to close around this support zone at 126, and if this support fails, you're looking for the full gap close at 122.8. Below 122, we could retest the lows right around 115, so you are staying risk off if we break below 126, but if you want to try to take on risk at this level, then you are going to do that right here at this level at 126, and the breakdown will tell you to instantly get more risk off. To the upside, you have resistance at 136 and 138, and the bulls need to break back over those resistance levels to try to reestablish a bull trend. On Microsoft stock, we were down 1.1%, and Microsoft continues to look like a falling knife that is now coming back down to this support test right around 252, and if that level fails, it is going to be a very quick trip down to 242. So Microsoft remains risk off to the downside while it's below 267, and the bulls will need to push Microsoft all the way back over 267 to 270 to start reversing the strong downtrend, but overall that could still be strong resistance before the next lower low. So you need to wait until Microsoft can get back over the 50 daily moving average before trying to get bullish, unless you're accumulating for the long term and don't mind having to buy at lower prices. On Nvidia stock, we were down 1.33%, and Nvidia continues to flush to the downside as it is quickly approaching the next support level at 129 and still has a very large gap to fill to the upside right around 150. As you can tell, this is a falling knife scenario, so there is no reason trying to catch this falling knife. So wait for some type of positive bounce off of a support level, and then you can manage your risk from that level. So right now it's more than likely Nvidia is trying to get to 129, but any bounce from these levels could establish a support level that you will want to pay attention to and possibly use as a risk level. We need to break back over the 145 resistance to fill that gap, and we have a long ways away before we get out of this downtrend because we'll need to get all the way back over 169. On Tesla stock, we were up 1.56% as Tesla continues to hold the 50 daily moving average as support, which is right around 270, and a failure of that support to hold should bring us down to 258 and filling the gap at 250 because we do have the confirmed double top and we are still below the neckline. So for that reason on Tesla, you can try to be bullish off the 50 daily moving average at 270, but you need to remain risk off if that level breaks down while we are below 283. If Tesla can break back over 283, then you can start getting more bullish with that as your risk level, and then you'll be looking for resistance right around 297 to about 308. And it will require Tesla breaking back over that resistance to get out of the short-term downtrend because you can clearly see lower highs and lower lows in the short term. On Apple stock, we were down 0.82% as Apple has now 2 daily closes below the 50 daily moving average, which means it is more than likely trying to come down to this support zone right around 151.5. Your risk off below 157, and if Apple can break back over that resistance, then you can start looking for the opportunity to go up there to fill the gap at 163.5. but you need to stay risk off while we're in the falling knife because you never know how low these things can go, and you never want to try to catch a falling knife until it can find support. On the financial sector, we were down 0.24%, continuing to close below the 50 daily moving average and starting to develop a short-term downtrend. The industrials were up 0.16%, still below the 50 daily moving average and still in the short-term downtrend. The healthcare sector was up 0.1%, still closing below this right shoulder resistance around 126, so you need to be risk off while we're below that level. The energy sector was down 0.93%, closing back down below the 20 daily moving average, and it needs to hold above the support trend line, otherwise we could go down there to fill the gap at 69. So jumping back over to the S&P 500, without a doubt this is extremely critical support for the bulls, and also it's going to be an extremely critical level for the bears, because if they can break down through this level, they can start pushing for brand new lows. Keep in mind, anything can happen from this level, so you need to be prepared for both scenarios, and then once the price action confirms which scenario is playing out, you can trade accordingly. It's completely fine to do absolutely nothing until you have more clarity on the market, and I can assure you nobody knows whether or not we are going lower or higher from this level, because it's a very critical level that is going to define a pivot in the market, and nobody can be sure which direction that's going to be in. So just be prepared for both scenarios and let the price action do all the talking. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, which you can find out how to join by clicking on the link in the description of this video. Also, don't forget about the 50% off Labor Day discount coupon code, which you can claim for Bank Trade Alerts to get 50% off your first month. Bank S Plus only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can find out more info about Bank and how to subscribe by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.